Well, what is going on? Yesterday I did a video saying that the housing market was going to follow commercial and was going to decline, maybe even crash, 30, 60% correction. And today, Zero Hedge comes out and says Case-Shiller Housing Index hits an all-time high. What is going on? What about the crash? Now, my models have been saying that we are completing a cycle and risk is very, very high. Let me go to my next slide. We talked about this just yesterday. So I want you to take a look at this. Now, I am using the chart, the median sales price housing for houses sold in the United States. I've been trying to follow that. You know, a lot of these metrics are just a little slightly different, but they're all telling me the same things except for the Case-Shiller. So when using this, when we have a peak and the cycle is about to roll over, we have two peaks. The first peak is the most important one. That's where there's all this exuberance, multiple offers, over asking price. You got people so excited that when you go out to dinner or you go to cocktail parties, they're telling you how much real estate they bought. Now that was in March, April, May, June timeframe of 2022, a year and a half ago, heading on to 2 years ago. Since then, the market's changed. And look at the data. You can see this going right into the Federal Reserve. We peaked at 479.5. Now, this is quarterly, so the last quarter that Fred is showing was 417, about 10 to 15% less than the peak. And I think the new data is coming out. It's going to be about 435, which we had a pretty good quarter. That was to be expected into the spring selling season, but certainly nowhere near as high as the first peak in June of 2022. And once you get to these second peaks, this is where all the action has stopped. You got the latecomers coming in, the ones that got priced out of the market that weren't paying cash. They were kind of marginal buyers. And we're seeing that now. These are people who are also mostly at risk because they're kind of late, they're last to the buyers. But yet we have this Case-Shiller. Let me go to my next slide and let's just take a look at that. What is going on? This just came out this morning with Zero Hedge, and you can see the comparison of the two. Now the red is the median home price, and you can clearly see where it peaked. You know, it doesn't go straight up and down. It does bounce around. You know, my models are stylized so that they're easier to read, but this is the way they actually look, and you can see that it's well below the peak. And it's the red one. That's the median. That's where most everybody falls in. That's where most of the sales are at. You know, on an average, you get someone that sold, very expensive homes, drags the average up. And let me tell you, in today's market, there's a whole lot more expensive homes than cheap homes. So it kind of distorts it. When you're trying to use the median, it's not necessarily a perfect index. And Dr. Shiller is a brilliant man, just absolutely brilliant. But we have a divergence. You can see that green line is, of course, the Case-Shiller, and it did hit an all-time high. So what do we make of that? Well, let me go to my next slide. Well, here you can see going into new home sales. So median new home prices, again, you can see the peak, $496,000. Again, kind of clustering in that 2022 time frame. And it's dropped since then on the Federal Reserve electronic data system, using another metric, the new homes. Again, you can clearly see the two peaks, and you can see that today we are way below the peak. Now, if we go into average sales price, again, average sales prices are typically higher than median home prices, but let's just follow them. Again, clustering in that Q4 of 2022, you can clearly see peak number 1, and then later on peak number 2. And peak number 2 is when you're starting to see the momentum's coming out. That first peak is a pretty awesome peak. That's where the sales momentum is just crazy. And you might get a little higher prices in peak number 2. That is possible, but you don't get the volume of sales. So it's kind of a different metric. That's why we use the median as best we possibly can. But what do you make of this? So for me, it probably has to do with the metrics that they're measuring. Remember, they use the same homes that have been sold before, trying to follow the metrics, and it's just a smaller segment. So it could very well be just like the average. You get a whole bunch of expensive homes, they'll drive that average price up. I'm not that familiar with their metrics. We've been following the actual sales prices that we find in Federal Reserve electronic data. Now, here in my home market, this is easy for me. We can see it. June 2022, we peaked. No question about it. Again, we're using the middle tier, which is the median. And we can see that the average sales price, the median sales price here in Phoenix in June 2022, this is why everybody's coming to us, by the way. This is why people come here, is that the median sales price in June peaked at 346. That was the peak. So it's come down since then. So you can easily find a very, very nice home here for a lot less money, and it's a pretty good value. This is why people are coming here. And you can see clearly, let me blow this up a little bit for you. You can clearly see this. We're still around 343 somewhere, but 330, I think that is, maybe 335, but still below the peak of June 2022. So again, another metric showing that we have peaked and we're coming. Now, this is my favorite market. This is put together by John Wake here in Phoenix. He's using the Armless Arizona Regional MLS data, and you can really, really clear this. And of course, this is much more familiar with me. You can take a look at this. But peak number one came in May of 2022 at $475,000 on this metric. Peak number two came in at 443. And we got another one. Again, you can see if we looked at in Great Financial Crisis, there are actually kind of like three distinct peaks. We've had first, second, and it looks like third is forming at 435, but they didn't make it back to the top peak, and it's clear. So this is just our different metrics. The ones we're using clearly show that prices have peaked. And I don't think they're going back up. Now, I'm going to tell you, while we're looking at this chart, I want you to take a look at this. So if you follow this red line over on the left, that was listings. I haven't got this put into it, but that is the listings here in Phoenix. Now, I was here in March of 2005. It was a very frustrating time to be a investment advisor and an investment guy, even a real estate guy, because there was only 2,936 houses available. 4.5 million people lived here in March of 2005 2006, and there's only less than 3,000 homes for sale. But I'm going to tell you, if you look at this chart, let me blow it up for you. Just look at this chart. When we got up 12 months later, just 12 months later, we had 33,000 homes available. So we added 30,000 properties for sale in 12 months. That's how quickly that market turned. And I think that's what we're looking at here. I think we're looking at a market that's going to turn. I've been following the Case-Shiller. It was a shock to me today to see. I just assumed it would be coming down. I think we need to kind of watch that. But the rest of our metrics on every level that we're looking at clearly show that the peaks have been in for 12, 18 months, 24 months on some places. And I think that we have a distinct completion. So what does this mean for us as investors? What does this mean for you as a home buyer? Means that unless you need to buy a house, now look, we're in the discretionary capital market. We can put new capital out, or we can't. And we just can wait, and we can. We can or not. Just depends on what's favorable to us. Now, we have not put any new capital out since really Q2 of 2022, doing a lot of 1031 exchanges, which is nothing more than relocating your investments from one location to another. We've talked about the endangered cities. That you can go back to my videos. By the way, if you like my videos, please give me a thumbs up and subscribe. YouTube just loves that. It really, really helps. But what does that mean for you as a home buyer? We had a lot of people ask, well, prices coming down. I think so. I think there's a balancing act here. We've got several things. There's other cycles rather than just the housing cycle. Now, this is not a housing cycle. So I said that because, most of my clientele is housings, but this is a real estate cycle. So you can clearly see that the commercial is. Let me go to my next slide. I'm getting ahead of myself here. So you can clearly see that in the real estate cycle, when you look into the commercial, and commercial is leading the way for the cycle. I've shown this before, this from Zero Head earlier in the year, or earlier in a month, that at the COVID shutdown, we had a big peak of commercial delinquencies, and we have exceeded that now. So remember, commercial is part of the real estate cycle, and it is clearly showing delinquencies are way up, which, let me just go to my next slide, shows us that we have rate of change on sales. And you can see peak one came in 2021. It led the way for real estate asset class. So I think that the market is done, so we're not investing. I think we have a great time. So let me get back to what happens if you need to buy a house. Well, look at you. If you're moving from Dallas to Phoenix and you got a family, you got to buy a house. Just do the best you can. I think rates are going to be probably 5-6%. I don't think we're going back to 3 or 4%. If we do, it's going to be problems for us. So if you need to buy, you need to buy. Phoenix is a great marketplace. It will certainly recover. We're doing 1031 exchanges. If you are thinking of selling your home, I think you're going to get more money now than you will next year. So, so if you are going to sell, I think you'll make more money this year than next year. But of course, you've got to buy something. So there's kind of a balancing act in between. If you're going to go rent something, it's pretty extreme, but you might do that. Before we say yes or no, please realize that we're advisors. I can't tell you what's best for you or advise you without really knowing you. So you're welcome to reach out to us, and we'll set some time aside, and you can come in and see us. In the meantime, my very, very best to you. This is where I am at. You're welcome to reach us. I'm with West USA. It's like the number 10 or 15th largest independently owned real estate company in the country. I think we do $5-6 billion. It's certainly in the top 20. Really large. They do all our back office work for us, and you'd be very happy with this. So give me a call. My very best to you guys. Bye-bye now.